All right, what is up, YouTube? So I wanted to, keep you guys updated with the oil trade that I did initiate yesterday. So I would say, sad to say, I did get out of UWT for a loss because of I seen that the oil contract was it was getting close to breaking that $49 handle before result. So I was a little bit skeptical of that. So I did sell. So what I'm about to show you is going to make me look like I'm crazy for selling. So like I said, we're gonna run through my portfolio, and then we're gonna jump into to the oil stocks. So we open up right here, and okay. All right, let me give you a rundown through my portfolio once again. Berkshire Hathaway is a long-term pick. Like I said, we were down over $700 on this one. Chesapeake is a long-term pick because we do believe in oil. Remember, we're very bullish on oil because we think that prices are going to go up, relative to what the contract is showing. There are definitely more profits to be made. Barracuda Networks did come, I would say there was overselling at 19, really low 19s, and we definitely decided to get in. So as you see right here, we're up a good chunk. Ford Motors, like I said, this was pointed out by a subscriber on the live chat, and I definitely bought it. This is a penny stock, like I said, 0001. These are what happen when people do invest in these things. They think that they're gonna make 100% easily, but what they don't realize is that you have to buy it 0002 rather than buying it 0001. Now, Honeywell is definitely a long-term pick for me, simply because I'm looking out for 2018 and 2019. So we want to have long-term picks for the future, and we definitely want to have short-term picks, just for some quick cash to build up our long-term positions. Lululemon, we're coming down on Lululemon. It was down about 50. I would say it came down from 54 and fell back down to 52. Now, due to the market rallying and things such as this, Lululemon is definitely stalling out. So we definitely might look to exit the trade sometime soon, but we want to hold on to it a little bit longer to see what's going on. PLX is definitely a penny stock, that people like to play. This is how people's losses, gather up, because they think that, if they hold it just a little bit longer, the stock is going to spike up and all that bull crap. Okay, so we have SPU. This is definitely a pump and dump stock, and I wanted to see what happens when we invest in a pump and dump stock. As we see, we're up about $132 on it, and we only put in about $800, I think. Right here, UWT, this is definitely an oil trade that I made yesterday. We're up about $160 on it. So we're definitely going to break down that oil trade. All right, UWT. As we see, the uptrend, it's still holding. Let's go ahead and look at the contract, because we remember, we cannot base any moves looking at the stock. We have to look at the contract. So oil has hit $50. I think it's above $50 now. So remember, this is delayed data about, as you see, about 20 minutes, 20 to 15 minutes. So the trend does call for this thing to go 51. Now, if oil gets rejected at 51, we go ahead and short, because that daily moving average is going to act as tough resistance. Now, if we get a good oil number to break us out of that resistance, we might see a breakout, and then we might hit that 55, mid 50s rally. And then we might see, come back down. But that's just the early stage of this bottom process. Like I said, that uptrend is going to hold throughout the year until we actually get some bad output numbers that actually break us through that. But like I said, if you guys would have read the article on OPEC saying they're going to severely cut their output, that will definitely help you when you start to invest in oil companies and oil stocks. So like I said, we base our moves off of the contract rather than the ETF. A lot of people base their moves off the ETF, but that's simply how how you don't make money. You want to make money basing your moves off the contract. So we see the contract was bottoming out right here at the uptrend support. Excuse me. And what we do here, we see the trend is bottoming out support. Now we see what follows this contract. UWT follows its contract, and also it has leverage with it. So if we see the contract bottoming out, we definitely want to get on the leverage. We don't care about what the ETF chart is showing. We want to pay attention to what the contract chart is showing, because the contract is, it's making the ETF follow that, or the ETF is following the contract. So we don't base any moves off of the ETF charts. We base it off of the contract, and that's how you make money. So As we see, oil bottom right here, oil bottom right there, oil bottom right here, and looks like oil is going to bottom right here, and we're going to go higher, probably up to the mid 50s once again. Like I said, we will be at a moment of truth at some point in time when we do have to beat that $55 level to see if we go to 60. But if you have a long-term view on oil, you think it's going to 60 or whatever, definitely go ahead, buy Chesapeake. This is definitely a stock that you need to be in. We see it try $8 twice. Right now it's at 5. Daily moving average, calls for the stock to go to 581. So we want to pay attention to what the daily moving average is telling us as well, relative to the RSI and the chalk and oscillator. So as long as you guys are paying attention to the contract rather than ETF, you guys should be super successful with trading stocks. I'm just a little bit mad that I did hold this, a little bit longer, because you see chalk and oscillator show buyers are stepping in. We got buyers stepping in right here. Now what made me so, like I said, hitting that $49 handle, that's very technical for me, but I really wasn't trying to take any more risk. But as you see, that oil number could have made or break, or it could have broke oil. So it could have broke oil past that $49 level, or it could have broke oil up past that $50 level. So we see a positive number break oil past $50. And if you definitely aren't aware what less oil means, is simple supply and demand. That's all it is. And also we have to get that price up, because if you read about Saudi Aramco, they need the prices to be up so that way when they do IPO, the stock will have a premium added on to it. So we definitely want to pay attention to that. This is another stock that I'm in right here, STX. I'm definitely trading this off of the dip. I really hate that, the stock is definitely down right now. But, we've seen lows about 41.76. I was buying at 43. My average is 43.28. So I'm really hoping that this stock does bounce back to, as you see, daily moving average cost for this thing to be at 47. That's at least $5 worth of premium from where it's trading at right now. But I'm looking to get out at 45. We see it get rejected at 50. Now, since we got rejected at 50, we know how to play these $5 increments. So 40, 45, 50. Rejected at 50, comes back down to 45, and that's typically where the price target needs to be for the stock. So that implies a $3 premium, or maybe $2.50 premium from where the stock is trading at. So you want to pay attention to what the technicals are definitely telling us. But I'm really hoping that this thing does maybe 44 today, or closes above my average buying price. But until then, this thing is definitely getting hit really hard. We see that buyers have left the area right here. This is a 20-day, 180-day showing buyers have left the area. Only for the 1 year. The 1 year is definitely showing that we still have just a little bit more room to go before it becomes oversold in 1 year, before you guys want to have a long-term view on it. But if you're looking for a trade, this is definitely a trade that you might want to be in, because of the oversold activity that is going on with the stock. So we see a breakout above the daily moving average, but typically this might be a weak signal for the stock, but we have to pay attention to the way the stock moves. So like I said, oil did hold the uptrend. We pay attention to the way the contract moves, not the way the ETF moves. If you want to trade like a pro, you must follow the pro rules. We look at technicals, we look at daily moving average, we look at all that. We just don't look at, just about 4 indicators. We definitely want to read as well. That's another indicator. And also just doing your research. That's another indicator. So as long as we have our indicators working for us, that's definitely a positive sign. As we see, oil is definitely spiking here. And if we wanted to, trade oil on the downturn here, say that oil is definitely going to fall back, we definitely want to buy a DWT and trade it for a quick gain here. But we definitely want to get out of oil's way, when the bulls are definitely ready to play. So that's all I have for you guys for today. So make sure you guys are doing your research, reading, filtering out what you need, what you don't need. Remember, if you're following an ETF that follows a contract, pay attention to the contract, not the ETF. And that'll paint a better picture for you guys. So we want to pay attention to what Trump's tax policy is going to do, or if it's going to get passed. And also, the only reason I'm not, going ahead and buying shares in Honeywell right now is because the tax policy. We have to see if the tax policy is gonna succeed or not. So let's check out win resorts. Now, like I said, $30 increments does matter. So we see 90, 120, 120, 150. Now we want to pay attention to this 120 level. If it does fall back on being oversold, we definitely want to step in and buy. But let's check it out in 1 year. On the 1 year, we're definitely heavily overbought. So we see 90 and 120 is definitely reached. And like I said, when it does break out, see, this is why I already had, my my resistance level set for right here, 119. What happens when something breaks out of resistance? It either shows a large bar piercing through or resistance, or it either shows a gap. So stocks fill gaps. So we might want to wait till this thing fills the gap back, and that might open up a buying opportunity for us. But Steve Wynn is definitely a really good CEO, and if you aren't aware of Wynn Resorts, we definitely want to read up on that company to understand it, because it really is a good investment. And as we see the XIV, this is definitely worrying me, because it looks like the market might be due for a fall sometime soon. We see 75.48 was definitely the high for the stock, and as we see, we're approaching those highs, and the stock really can't do it. Even though the market is up today, we see the market strength is down. So it's definitely, letting us, it's letting us know something that's up. So we might want to open up a short here. We might want to look at the TVIX to definitely take advantage of that market weakness. We see the chalk and oscillator showing that buyers are stepping in and protecting themselves from a downfall from 21,000. Now, NASDAQ is definitely heavily overbought. Let's go ahead and check out the TQQ. Heavily overbought at 74. The triple Q, heavily overbought at 73. These are definitely the same thing, but one just trades with leverage. So we have to pay attention to that. And definitely oil is coming down. It's about 49.87. So we want to pay attention to, the way that the stock market moves. Once we understand the way the stock market moves, we will definitely start to profit. And we won't have to watch any YouTube videos on, how to make 1,000 here, how to make $1 million in a couple of months or $1 million in a year. We can just do our research and laugh at the people that's promoting that, because we know the people that are promoting that are making money off of the people that buy that crap. So we want to make sure that we're not falling for any kind of scamming traps. So like I said, pay attention to stocks that are oversold, because as we see right here, UWT, we're up about $500, and we definitely bought shares about $18.10. So we definitely want to pay attention to what's going on. I really can't put it any other way. A lot of people don't want to do homework. They don't want to do anything, and that typically irritates me, because those are the people that lose money in the market all of the time. We see NRG. NRG could benefit from low for oil prices as well. We see NRG is definitely coming down. This might be a buying price or an investing price for people that want to invest. But as we know, as history has shown, $9 is that low. Let's check it out 3 year. This will be the last stock I'll show you guys. I have to do a presentation. Okay, as we see, $8, $8, $9, and then we see 17 is the high, and we want to pay attention to what the highs are, because at some point those highs will have to get touched, but we want to see if those highs are going to hold and if we're going to break through those highs. So I know it's not an all-time high, but we have to pay attention to what the charts are telling us, and the charts are telling us 1837 is a price to watch out for. So that applies maybe $1 upside before the stock has some more trouble. So pay attention to that. Other than that, guys, we got Caterpillar exploding. We got TNA, small caps, like people, they don't want to trade. They want to trade and invest in penny stocks, but if we really want to risk our account, we will definitely buy some growth that involves penny stocks. So TNA, put that on your chart. I know it's trading over $100. So 113. We see what happened. This was in 2000 and what? Oh, this was in 16. Thought it was 11. Okay, in 2016, you could have made a crap ton of money buying, this at $35. Now the stock is trading even higher at 113. So we want to pay attention to what the moves are telling us, and that's pretty much all we have to do in order to succeed this market. A lot of people make it seem complicated, but once you do your homework, once you filter out the news, and once you, like I said, pay attention to what the market is telling you, pay attention to what the technicals are telling you, you'll be a hell of a lot more profitable than a lot of people that are preaching, that you need to buy penny stocks are. So that's all I have for you guys. Take care, and I'll probably be back with a video tomorrow. But I really want to see what this tax plan does before I go ahead and, start to invest in different stocks, and we'll see how my investments are doing, for those stocks. So take care.